Hey everyone, it's Wilson. Welcome back to another video. Happy Monday. Hope everyone made a good amount of money off trading in the market. In this video, I want to cover M1 Finance, which has been super popular. It's an app right now that everyone's been talking about for investing. And in this video, I want to share over what it is, some pros and cons, and some strategy that I use to get 20% in monthly passive income, which is what everyone wants, right? So what is M1 Finance? M1 Finance is a hybrid mobile investing platform that allows you to invest in fractional stocks for the long term. So what does it actually mean? It's a free investing tool that allows you to invest commission free, which is like kind of similar to like Robinhood, Betterment, and stuff like that. Except Betterment charges like a small management fee, and as you guys know from my previous videos, I'm a really big fan of Betterment. I invest a lot into it, and I believe in it a lot. But M1 Finance is just so killer right now, and it's getting so popular. People are raging over it. It allows you to, I guess the biggest thing is that it allows you to invest into fractional shares without any hidden fees. So how do they do that without, with trying to make money? They actually have this thing that called M1 Borrow, and it's like a margin account that allows you to borrow pretty much do marginal trading to in order to buy more into the bigger stocks. And the minimum is only $100. So what are the pros? The main thing that that attracted most people in the beginning was definitely the fact that you can invest in large cap and big companies. So imagine companies like Apple. Well, that's probably not the best example, but think about like Google or Amazon. These companies are always on the news. They're all over the mainstream news, CNBC, but you just don't have the money to invest into it, right? And buying one share, oh my God, that's just a killer. Watching it go up $30 a day, then dropping $20 is not really fun, right? We want to make big money, and one allows you to actually invest partial shares into it, so you can own a bunch of these big stocks that will grow in the long term and the solid companies, and it's just a great way with extremely low barrier entry, with just a $100 minimum to create the account. There's no fees at all, as I mentioned, and they also offer an M1 checking account, which you can use to kind of track like a separate transactions and stuff like that. There's M1 Borrow for margin trading, but I wouldn't really talk about it. It's kind of risky, and I never really recommend margin trading unless you're shorting a stock. And you can automate it by setting and forgetting, but I like to manage it a little bit more, and M1 gives you the flexibility to do that. Now the cons is that it's a startup, it's a new company, it receives a lot of hype, so anything can happen with companies no matter how much good news they pump out. There's no mutual funds right now, but they say they will be releasing it. However, there are ETFs, so if you're a more aggressive trader, this might work better for you. There's no tax harvesting like Betterment or Wealthfront, and there's no 401k support, but they're looking to launch that in the near future. Now let's talk about the strategy that everyone's been waiting for. So right here is the account value, and in this strategy, we just invest in dividend stocks for passive income and letting it stack up against each other. And as you can tell, over the course of roughly a little bit more than 3 months, it was roughly 20% gain in just passive income. Really aggressive, but it works really well, and this is achievable through only investing in dividend stocks. So you don't even have to go for like the technology sector or utilities or healthcare or something that's more risky. Now, the dividend growth strategy, as you can tell right here, shows every month transactions and the dividends gain. Now, the trick here is to not really sell the stocks. The goal is to just let it stack up, let it automate, and let it reinvest all the profits from the dividend growth and stack up over time. So on the left side, you can see all the transactions, the account value, and the estimated annual income that you receive from dividends over time. On the right side, it's just a projected of what it is, and as you can tell, it's based on quarterly dividends that's paid out. So when it comes to M1, they allow you to do different pie splits, right? So you choose the fraction of stocks you invest into, and your imagination can get wild, right? Your horizon can get wild. For this specific strategy, we focus on dividend pie splits. So everything that you see in the portfolio right now is all dividend stocks. And the main focus for me is the real estate sector because we know that it's king. REIT is king in generating passive income and having dividend payouts. They pay out highest dividends. Some are monthly, some are quarterly. But as you can tell, those are also the ones that generated the most return. Bonds don't do as well, but it did pretty well in this situation. And of course, the other sectors like tech and consumer, they're more for aggressive traders, with individual stocks, so they don't really jump up too much in the dividend profile portfolio type of profile. But this is a pretty decent split, and REIT was the main focus in real estate. And the whole goal was to not withdraw anything, not to sell anything, and just kind of let it stack up over time, reinvest, and watch your portfolio grow. And this is just a 20% gain, but as it stacks up over time and the market performs, you can easily see like 30, 40% return. So final thoughts, it's just a small portfolio on M1 Finance to test it to see how it is. Uh, what I really love is that the flexibility is great compared to other investment platforms like Betterment, Wealthfront. You can choose different sectors. You can get aggressive. You can choose what you want to invest into, how you want to play out your portfolio. Use it for big stocks and ETFs like Vanguards that you personally cannot buy into with unless you have a lot of money. Up 20% in 3.5 months. Overall, I really love this platform. I would love to see it grow bigger and launch more features like the tax harvesting. I'm using an automated deposit schedule right now, where I deposit everything monthly and just kind of choose the dividend sectors I invest into and watch it automatically grow with a main focus in real estate. And other options you can always use is Betterment, Wealthfront, Acorn Stash, and of course Robinhood that everyone knows about. Anyways, I hope you enjoyed this video. I'll give you guys an update as the account progresses. Subscribe and thumbs up. Again, it's Wilson. Hit that notification bell or whatever you have to do to get the updates. And thank you for watching and hope this helps everyone.